Welcome to the CFD Weekly Overview of the global financial markets. Last week, the euro was mainly flat against the dollar. The common European currency gained some support from the election of a moderate candidate backed by Angela Merkel as president of the German CDU party after Merkel decided to withdraw. However, Italian budgetary concerns limited the upside potential. The British currency dipped to a 20-month low on Monday. Prime Minister Theresa May abruptly postponed a parliamentary vote on her Brexit agreement, fueling fears of a no-deal exit from the European Union. She will go to the EU to seek reassurances over the so-called Irish backstop to ensure no return to a hard border on the island of Ireland. The options for the UK now include a last-minute agreement, another EU referendum, or a potentially disorderly no-deal Brexit. The Japanese yen was little changed, with solid volatility. The currency received some support from risk-averse investors, but figures released on Monday showing a GDP decline of 2.5% in the third quarter of this year put pressure on the currency. Overall, the US dollar remained flat last week. In spite of a potential decrease in the pace of interest rate hikes next year and weaker NFP data. However, geopolitical risks have broadly increased demand for the dollar amid worries in Europe caused by Brexit, the Italian budget, and the trade war. The Turkish lira weakened against the dollar after Turkish economic growth dwindled to 1.6% year-on-year in the third quarter, data showed on Monday, falling short of forecasts and putting pressure on the currency. The Central Bank of Turkey will meet on Thursday to decide interest rates. Gold prices continued to moderately rise last week on a weaker dollar and a slight increase in safe haven demand. The $1,250 level seems impenetrable for the moment. Oil prices were highly volatile last week but ended lower. Last Friday, OPEC agreed on a supply cut of 1.2 million barrels per day for 6 months, starting from January. OPEC committed to cut 0.8 million barrels per day, while non-OPEC partners will decrease production by 0.4 million. The news did not reassure traders that an oversupplied oil market will be rebalanced. You've been watching the CFD Weekly Overview of the global financial markets.